Good morning, good afternoon, good evening from wherever you're watching on my YouTube channel. Yes, as you can see from my screen, my trade of the week going into next week is AUDNZD. Yes, that is the trade that beats my high going to next week. But before we go into AUDNZD, let's quickly look at CADCHF, which has been our trade of the week for the past 3 weeks now, and we have been making good profit from it. Let's go check the update. Let's do a quick update on what we have on CADCHF, like we always do every week, looking at the top-down analysis. But we just need to pedal a little bit down for CADCHF because it has reached where our probability is kind of low. So trading is all about probability. You can see from the late last year to this period, you can see that CADCHF has been trending downward. If you watch our previous video, you will see we identify that this pair has been stuck in a range for a while. So what we say is, if you look at monthly always have high profit. It has high profit if you trade monthly, mostly traded by position trader. But that's not what we are using now. What we are talking about is we identify this range, then we said that it's possible that price we want to range like this. So I will take advantage of this range as we go further. So that's what we've identified on monthly. So, and it is actually showing us that it wants to range. So if we go further into the weekly, you also see that the range is also evident there. The range is clear here. So weekly also, you also see a push back to this low and back to high. So maybe for the rest of the year you may see a range, because currently the crude oil price is dropping as some news are coming out from Russia that they actually want to taper down on the reduction in supply of crude oil. So they want to make sure the supply more. So more the supply, what is crashing the price. But also invariably, because the OPEC decision too is still there, the OPEC Plus did not change their decision. So OPEC Plus decision still stands. So we also see price going higher. So that's what we have on weekly. So on daily we are still identifying with this our up and handle. It is shaping nicely, but while we are stepping down on CADCHF going into next week is we have actually reached our area of interest, or should I say our take profit area. So we have met our first target, our TP1 here. So the TP2 is not really giving us a high probability that we will reach there. This is our TP2, which we use Fibonacci to identify or to pick those two areas. Use of Fibonacci to mark out target areas. So you can see that it's actually reached nicely 50%. We targeted the 50%, then we actually take profit from this area. Then we are expecting the price to push to our second TP2, but we could not get there. So I think going from here, what we are expecting is for price, price will be a little bit sluggish in this area. So all we want to see is this, and price pushes back up. Price pushes back up. So this is what we are expecting. So at this area, you may see that price will just slow down a little bit and push back up. So going forward, that's what we are expecting. That's why we are out of the trade for CADCHF for now, while we see price do his thing. So let's see what price will do in this area. So we'll be looking out for CADCHF while it goes up. So we are still looking for the move up. So that's what we have for CADCHF this week. So going into next week, we'll be looking at AUDNZD. AUDNZD is the trade that actually beat our eyes going to next week. So if you look at the top down analysis for this trade, we go to monthly. What do we have on monthly? From the monthly perspective, you can see, and it is very, very clear that this market is ranging. See, it's clear that this market is ranging, and you can see that the trajectory is coming from up down. So it means the NZD has the upper hand there. So when we see a range of consolidating market like this, what follows is always massive. So but meanwhile, you can always take advantage of the ranging market. Trading the ranging market is very, very much more risky than a trending market. So identify these two areas, these two ranging areas. Yes, these are the area that the market is ranging. So what we could see is the market could either drop further from here to the bottom, then back up. Maybe for the rest of the year, this is what the market will do until we see a a break either to either side, or maybe up or down. But because of the strength of NZD, you can see it's coming from the upside to the down, so we could see a further breakdown of this. So another thing we could see is that's why trading a ranging market is risky. Instead of dropping down, you may see that the market will just move back up from here, you know, and down. So sometimes you may not be able to decide or determine where the trading market is going. Alright, some people prefer to stand out, you know, to stay out of a ranging market. So, but we would like to take advantage of this trading market or move, ranging market or move. So let's quickly go to weekly and see what we have. We're able to identify what the monthly is saying. Then let's quickly look at it. So what do we have on the weekly? The weekly is showing us, you need to train your eye to see all these patterns. I can see a pattern here on weekly, something that looks like a triangle or a wedge, if you can call it that too, you know. So if we look at this, it looks more like a wedge or a triangle. Yes, let's call it a triangle. It looks more like a triangle. So in this case, you can see that the triangle is closing up fast, and in this type of circumstances, when the market break out, it's going to be massive. It's going to be massive. It's going to be massive. So is either the market, goes back up, or rather, let's say the market could break out. There are two scenarios here that could happen. Market could break out, then we test before finally dropping down, So that's scenario one. Another scenario could be that price could just bounce off from here, and break out to the other side, then come and retest, then go back up as far as the previous higher. So that's what we have on weekly. That's what we have on weekly. Then let's quickly go to daily, which is the last of the higher time frame that we normally look at. That normally shows us direction that we should go. So if you look at daily, you can easily spot this kind of pattern. You can spot a lower high, identify lower high, these lower highs. The market giving us lower highs. Yes, giving us lower high, and also it maintains this resistance, or we can say a supply zone. So this zone is holding back to back. What this means is if you want to read or interpret this market, you can say the sellers are holding very strongly here. The sellers are holding up here. They are holding the line. While the buyers are here struggling. They are struggling to hold this area. So what we could see going forward is, the price could, break out because of the pressure. The price could break out from here, then retest, then go down. So that's one scenario here that we could see. Another scenario could be price just, pushing back up, to the top of the demand supply zone of resistance where the buyers are, and the buyers could likewise again push it back down. So you can see that from the monthly up to the daily, showing us that it's possible that market will be ranging. This also could be a form of ranging market, but there is high possibility or high probability. Okay, sorry for the break. So what we are saying in essence is this: in a situation where we wanted to take a trade, we look at some criteria. Let's quickly go and check before we talk about taking a trade. Number one is the COT report. We look at the COT report for the Australian dollar and the New Zealand dollar. First of all, let's look at the Australian dollar. Looking at the Australian dollar, it's loading. So what we can identify, let's allow it to load. Slowly. It take a little while. Sorry for keeping you waiting. Okay, thank you for waiting. It has finished loading. So what we can identify is, you can see the Australian dollar, also called Aussie, is net short. The position is net short. So that's why you could see AUDNZD on the downside. So the recent COT prints, you can see that they are adding long now and closing short. So let's look at it from the trend line perspective. Looking at the AUD from trend line, you can see, look at the trend line. You see that it has been going downward. It has been going downward. Also, the recent bar charts, or the recent charts, shows us the Australian dollar has 24.5% long and 5.5% short. You can see that. So let's go and look at the NZD and compare. Let's go and look at the NZD and compare. Now, let's look at NZD. Also, NZD, just like AUD, also printed what they added long, they closed short, which means they are taking profit on the short position. Also, they have been net short, just like AUD, but the AUD has more net short than the NZD. What this means is COT wise, the NZD is stronger than what? Than the AUD. Looking at it from the trend line perspective, you can see that the AUD, NZD, is trending downward, but not as fast as the AUD. I also see the last move. You see that is even close to the positive area, although it's still under the negative position. Also, looking at the bar chart, it's clear that it's far better compared to AUD. So it's 40.3%, while that's a 9.7% short, yes, then 40.3% long position. So NZD is far more stronger than the COT. Another thing we like to look at is what? The retail sentiment. What are the retail traders? What are the retail traders? What are they doing with respect to the AUDNZD? You can see the retail trader, they are 92% long for AUDNZD. What this means is retail traders, they are taking 92% position on the long side. So for the big money or the smart money, like they say, always take the opposite position of what the retail trader normally take. Because what we used to know, or what we know, is that 95% of retail traders struggles or are losers. So we don't follow loser, we follow the big money. Big money is always on the right side, so we follow the big money. So we'll be shorting AUDNZD. So you can see these criteria that we've selected are all aligning. Technically, we are still waiting for a break and retest. But that is on H4, which we will look into shortly. Then COT wise, you can see that the NZD is far stronger than AUD. Then the retail sentiment now is showing us also that we rather go with the big money. We are shorting, AUDNZD. So another thing I would like us to look at quickly is the interest rate. This one will serve as for the fundamental. So if we go and look at the NZD, see the NZD, the interest rate is 5.5. As of last week, they maintain the same interest rate. They hold the interest rate, they did not increase and they did not reduce the interest rate. So they hold the interest rate. Let's look at AUD. Also last week, AUD came up, that is the Reserve Bank of Australia also came with their own interest rate. So they also hold, interest rate. They did not increase. You can see 0 basis point. They did not increase too. They hold the rate. So, but we have 5.5% as interest rate year on year for NZD, while for the Australian dollar has what 4.1%. What this means is, the interest rate in New Zealand is far more higher than the interest rate in Australia. So fundamentally, it also shows that the NZD is far stronger than the AUD. Yes, so you can see that all our criteria have been met. So those are the things we look at before we take our trade. So this is our checklist also. This is a new addition to help us with taking our trade. So if we go to AUDNZD, let's look at the AUDNZD. Now, CO2 report wise, what do we say happened? We say NZD is far stronger than AUD. So instead of clicking yes, we say no. No stand for the fact that we are selling. So for retail sentiment, so it's also no, because also we are shorting, we are selling AUD, we are buying NZD. So it's also no. Technically, we will not be able to identify that technical analysis. So until we are able to identify going to next week, then we know what to do. Then fundamentally, news and economic data, interest rate shows that New Zealand is far stronger. So we meet 3 criteria. So going to next week, we'll be looking out for the first criteria before we can take the trade. So what will we be looking out for? This is the 4H, and this is where we'll be taking our trade. So how do we take this trade? We look at this. Since we say the NZD is far stronger, what we'll be looking at is we look for a breakout of this range. Then we look for a retest. Then we push it further. So now we now determine our take profit area. We go to that soon, but if going to next week we still see this market ranging going up and down, we will not be interested in this market. Why? Because I don't trade a ranging market in a lower time frame, because it doesn't give a good risk to reward if you measure them. It doesn't give you a good profit, unlike the monthly that we identified. So those ones you can easily take them on a lower time and get a lot of reward. So that's how we'll be taking the trade. So where are we targeting? Where will we be targeting? So our TP1 will be here. Our TP1, let's try to TP1. Then our TP2, our TP2 will be the next area of the lower low. So this will be TP2. So those are the areas we'll be looking at to take our profit. So going to next week, we'll be looking at this area. Looking at this area. So we'll be shorting. So once we price, so this will be our first target. So the ratio is 1 is to, let's say, yes, this is 1 is to 4. Okay, 1 is to 4.5. That's our first reward. So the second will be That's what TP1 TP2 will do for this. So can try to push further so that we can get like 1:9.86. So that is what we'll be looking at going into next week. And thanks for watching my YouTube channel. God bless you and see you next week. Goodbye.